Hooty hoo, all my stock market gamblers. Welcome today. I want to wish everybody a happy 4th of July. Markets are closed today, so why am I doing a video? Well, I miss you guys. I knew I couldn't go the whole weekend without talking to you, so let's just go over a little bit about the stock market first before we get into the real estate market. Well, the stock market is kind of in a nowhere land right now. It's looking for direction. Now, I do think we're going to have a short covering rally at some point. I do also think we're probably going to get a pullback in the market down to the 200-week moving averages, and that's where I think we're going to bounce off of it and have that short covering rally. Now, people are saying, well, Mike, what about the crash? What about the crash? Well, I do believe a crash is coming. I do. I think that the big crash is coming, but I don't think this is it. Look, we're down, I know, 20% on the S&P, 30% on the NASDAQ, but it was orderly. It was orderly. It wasn't the crash. I think they're going to pump this up one more time. Look, we got midterms coming up, in November, and I don't think they want the market to crash before then. I think that we're going to bump up the market again. Now, I do believe a crash is coming. You got to realize that, 40% of companies in the S&P 500 are losing money? It's never been that high. These are companies, when they lose money, it means they have to borrow money just to make their payments, just to make their expenses. Okay, well, what happens when money gets tight? It's starting to get tight, and that's going to be a problem. And yes, that will cause a big crash in the stock market. But I think they're going to push it up one more time. Then once again, this is just my opinion, and that's what I'm staying with. Okay, so let's move on to the real estate market. Now, real estate market, we got the same type of problem. We got money tightening up, okay? We have mortgage lenders that, they're going bankrupt, okay? So you get the mortgage lenders going bankrupt because money's starting to get tighter. They're raising rates, right? We went from that 3% to the 6% on the mortgage rate. Now, why did we go so big when really, what did the Federal Reserve do? Well, they raised it, up to 1.5. Went from 0 to 1.5% interest rates, what the Fed raised interest rates to. Why did mortgages go from 3 to 6%? Well, they did that because nobody wants to lend money on mortgages, okay? Look, you got the Federal Reserve. They were buying $40 billion worth of mortgages. $40 billion a month worth of mortgages that they buy, right? So they've now stopped buying these, all right? And they're talking about selling the ones they have. Now, they have $2.7 trillion worth of mortgages, right? If they start dumping those onto the marketplace, you're going to see mortgages just spike up from here. They're going to go from 6 to 10% like nothing. But I don't think the Federal Reserve will be selling those mortgages. Why? Because they can't. They would love to get them off their books, but they can't. But my point is that there's nobody left to loan money. People, when they loan money for 30 years, they want a higher percent of return on interest. And that's why the interest rates have spiked up. People are not willing to loan money at the 3% rate. It's starting to get tighter. Money's starting to get tighter. There's no one to buy these mortgage-backed securities anymore. The Federal Reserve, they're taking liquidity out of the marketplace. Now, we have $31 trillion in debt? But I'm telling you, we need more debt if we want assets to continue higher. If we don't print more money and get more debt, 31 trillion becomes 40 trillion, becomes 50 trillion. If we don't continue to do that, asset prices will come down. Now, if we continue to do that, of course, we'll get hyperinflation and it will bring asset prices up. But what I want to talk a little bit today about is, the commercial properties, the commercial side of real estate. Now, nobody talks much about the commercial side. And when I talk about the commercial side, nobody complains. When I talk about houses going down 50%, a lot of people get upset. Not in my area, but commercial property, I think we can all agree that commercial property is one hot mess. I mean, it is really a mess. You got commercial mortgage-backed securities. There's just no one to buy these anymore. So you have these vacancies, let's call it. A lot of office buildings, a lot of the office towers, they're sitting there 50% full. And these are Well, the mortgages on these are not for 30 years, right? The financing is refinanced every 5 years. Now, 5 years ago, it was easy to get the financing because money was cheap and because the offices were full and people were paying rent and they could make the payment on their mortgages. They could make the interest payment on their loans. Well, now it's 5 years later. These are now half vacant, and some people would say they're half full. I get that. Okay, so they're half full, but the money is not available. People don't want a loan on these because even the ones that are in the offices, a lot of them are not making the payments. And a lot of these buildings, well, the banks own them. They've already been given back. Companies like BlackRock, I think they gave back one in New York, a big tower, a big high-rise office building, and they gave back one in Chicago. They just handed the keys back to the bank and said, we don't want them anymore. It's your problem. Now the banks, what are they going to do with it? Well, they're going to try to collect the rents until they can find a buyer for these. But it's going to pretty much be a fire sale, right? When you get all these properties that are half vacant and those half that are in there aren't paying their rent, you're going to get a fire sale in these commercial properties. Now, shopping centers are the same way, pretty much. I mean, right? Shopping centers are, you notice, you go to a shopping center, you'll notice a lot of vacancies. And a lot of the tenants in these shopping centers still are not paying their rent. Well, why don't they kick them out, Mike? Well, which is kind of funny. Well, who would they put in? Now, anyways, that's kind of a joke. I had this friend, he had a property and his tenant wasn't paying him rent. I go, why don't you evict the tenant? He goes, where will I find another one? I'm thinking, well, the guy's not paying you anyways. Why not at least kick him out? And how much worse could it be? But anyways, that's just a side story. But some of these shopping centers, the tenants aren't paying and there's vacancies. So these tenants that aren't paying to the landlord of the shopping center, landlord's not getting their payment. So the landlord has this big loan on the shopping center. They can't make that payment to the bank. So eventually the bank will now own the shopping center. Maybe the landlord just hands, the keys to the bank again and the bank owns the shopping center. That could happen. Now in my area, I want to talk a little bit about this. Say that 30% of people have gone back to work in the offices. Now, I live by Apple Computer, and there used to be all this traffic going into work every day. And when, 5 o'clock rolled around, all this traffic would be going the other way. That traffic's gone. I'd say it's about 20 to 30% of what it was, because about 30% of people are back in the office. That's it. They haven't gone back to work yet. So a lot of these offices are still sitting vacant. And shopping centers are also fascinating to me. I live by some very expensive shopping centers. I mean, these per square foot, they charge the highest rents in the nation. And the reason is because they do the most sales in the nation. But I go into these shopping centers. Now, I grew up in this area, and I've never seen this before. You go in there and they'll have armed guards. Okay, they'll be guarding the Apple store. They have one on each side of the store. Armed guards. I mean, what are they going to do? Shoot you if you take an iPhone, I guess. I don't know. But all the jewelry stores, all the high-end fashion, all the Gucci purse stores, they have armed guards standing outside of the store. I mean, to me, it's kind of frightening. I'm not so much worried about the criminals. These armed guards, they might get gun happy themselves and shoot the wrong people. I might be one of those people, but it's kind of dangerous. Now, it's kind of funny though. Okay, so that's the malls on the good side of town, right? So anyways, if you go over to the mall on the other side of town, now that would be the East Ridge Mall, you go over there, there's no armed guards, but I wish they had them over there. I feel like you need them more over there than you do over on the west side of town. Now, the west side of town, they have a lot of money over here and they want to protect that money. They want to keep that mall safe. Apparently on the east side, they don't care as much. I don't know. But there's a liquidity problem out there for these commercial properties, right? There's no one buying the commercial mortgage-backed security. That business is kind of dead, and you don't hear about it. You're going to start hearing about it real soon, probably the third quarter here that we're just started, and probably in the fourth quarter, you're going to hear about it really quick because, well, who's in those right now? Well, those would be your pension funds. Those would be where your pension parks their money because they try to get a higher yield. So your pensions aren't going to be getting paid, and now how are they going to pay you the money if they get defaults from these commercial mortgage-backed securities? A lot of pensions are in trouble. I don't know if you know that, but the pension system, Have you got a pension? I hope you get your payments, but it's shifting out there. There's so many things that are shifting. There's so many things that work together. Commercial property could bring down the houses, believe it or not. If a commercial crashes, the shopping centers go away. I'm telling you, the houses will follow. Look, it could be the other way. The houses drop first and the commercial drops. But when I say houses are going down 50%, people get upset with that. But I'll tell you this, commercial property is probably already down 40 or 50% right now because they're vacant, because the tenants aren't paying the rent, because they're giving them back to the banks already. Now, they're not giving the houses back just yet, but foreclosures are starting, and pretty soon all the banks will own the houses. Look, I'm a real estate broker, and the banks, they keep wanting me to get onboarded. They know they have millions of properties that are going to be coming back to the bank, and they don't want them, but they got these commercial properties that are also going to be coming back to the bank. I think it puts banks at a very big risk. I mean, the banks that own these huge mortgages on shopping center, these huge loans on office buildings, these banks, they might be getting in trouble, but they'll tell you that's all fine. I don't know if it is. I don't really trust the banks. We'll see how that plays out. But I'm just telling you, this is just my rant on the 4th of July. Why not? Because I love you guys, because I like talking about this stuff. And hopefully you guys like listening to it. Anyways, if you do, give me the thumbs up. Why not? It's the 4th of July. Now get out there. Go watch the fireworks. Go have some fun. I'm Tall Mike. We'll talk again real soon this week, maybe even tomorrow. I'm not sure yet, but give me the thumbs up. Bye-bye now.